Friends, the US Congress has once again failed to vote on ending the government shutdown. Trump has announced a trade war with China, and gold has become the first asset in history to reach a market capitalization of $30 trillion. So why is all the hype passing by Bitcoin? Who can actually support this market? And is there still any hope left for an alt season? Subscribe to the channel and let's break it down. The conflict between the US and China has escalated once again, creating turbulence across global financial markets. President Donald Trump confirmed that the United States is in a state of trade war, calling tariffs a very important defense tool. Treasury Secretary Scott Bessent made it clear that the US and its allies will not accept new Chinese restrictions. He emphasized that they will respond collectively together with allied countries, because China has gone against the entire world by imposing restrictions and violating free trade principles. The escalation is connected to China's plans to introduce new trade barriers, including restrictions on rare earth metal exports and increasing tariffs. According to Bessent, this provocation proves why Trump needs emergency authority to quickly implement tariffs. One of the Chinese officials even stated that Beijing will trigger global chaos if the new port fees are approved. Despite the tough rhetoric, negotiations are still ongoing. Trump noted that they have been actively communicating with China in recent days, and more meetings are planned this week. Importantly, according to Bessent, the stock market will not influence the negotiation process. Policy is based on long-term national interests, not short-term volatility, meaning Trump will not back down this time, even if markets collapse. Although we have heard something like this before, and eventually he did back down. More uncertainty is coming with the next Federal Reserve meeting on October 29th. Congress has now failed for the 10th time to vote on ending the shutdown. This means Jerome Powell may have to make a decision on interest rates without access to official economic data if inflation and labor reports are not released. Powell has already started preparing the narrative, and here's what he said during his latest speech. Data since July shows a noticeable weakening of the labor market. The rising risk of unemployment was the main reason for cutting interest rates in September. Now, one day of government shutdown is costing U.S. taxpayers $15 billion. This also creates major distortions in labor statistics, meaning the Federal Reserve will no longer have valid arguments against further rate cuts. But Powell found a way out. He is again hinting at rapid price growth driven by Trump's tariff pressure if interest rates are reduced too quickly. There are no signals about pausing monetary easing yet, but the message that the Fed plans to keep rates at high levels for longer was clear. As a result, global markets found themselves in a double uncertainty environment: trade negotiations with China and the Federal Reserve's upcoming interest rate decision. The main winner was gold, as its market capitalization surpassed $30 trillion. The key question: does Bitcoin still have a chance to survive these dark times and capture part of the capital fleeing the US dollar? Who can become the sponsor and growth driver for the crypto market? In the current environment, investors should focus only on strong narratives. And right now, those narratives are perp DEXs and token launch platforms. The well-known exchange Gate offers its own perp DEX, Gate Web 3, where users can trade with full self-custody and blockchain transparency. No KYC is required. Simply connect your wallet such as Gate Wallet, MetaMask, or Phantom, or just sign up using Gmail. The next strong trend is Gate Fun, the first platform designed for launching user-created tokens with unique functions. You can create your own token and build a community in just a few clicks without any financial cost, and then grow the project by attracting new members. You can find more details about token launch tools on Gate Fun and derivatives trading on Gate's perp DEX using the link below. Two asset classes are already showing strong growth, and both have clear explanations. Gold is rising as a classic safe haven asset during geopolitical uncertainty and fiat currency devaluation. U.S. stocks are rising on optimism around artificial intelligence and expectations of favorable policy. BlackRock CEO Larry Fink, whose company recently reached a new world record of $13.46 trillion in assets under management, comments that the AI boom is not a bubble, but a necessary investment for U.S. geopolitical leadership. He sees massive potential in companies like Meta, Google, and Microsoft, which are investing billions into AI infrastructure. And here is the key question. If gold and stocks are rising, why is Bitcoin, the supposed ideal digital safe haven, still lagging behind? The problem is that every major bull market with parabolic growth has always had a clear and powerful narrative driving it. Bitcoin currently lacks a strong and compelling catalyst equal to AI or geopolitical fear like gold. The only strong long-term driver left is institutional adoption, and this is where Larry Fink enters the game. BlackRock manages the world's largest Bitcoin fund, meaning Fink is responsible for protecting investor capital to keep earning hundreds of millions in management fees. Therefore, Fink acknowledges that Bitcoin is a valid investment and admits that he has reconsidered his previously skeptical stance. The CEO of BlackRock also noted that assets under Bitcoin management have already exceeded $100 billion. This is an incredible growth in just 2 years. Fink believes that we are only at the very beginning of the tokenization of all assets, from real estate to bonds. He sees tokenization as the next major development phase for BlackRock, allowing traditional assets to be transformed into digital form, making them instantly tradable and accessible. This is a direct use of blockchain technology, and this institutional transformation of traditional finance could become a fundamental reason for Bitcoin's future growth. Finally, we now have official confirmation of Bitcoin's institutional importance on the government level. The U.S. Department of Justice has confiscated 127,271 Bitcoins during a global fraud investigation. This amount equals roughly 6% of the total Bitcoin supply. According to Trump's executive order to create a strategic Bitcoin reserve, those confiscated coins will not be sold. This completely removes potential sell-side pressure and effectively locks these coins away, making Bitcoin even more scarce. Was this a strong signal sent by Larry Fink and the U.S. Justice Department? Absolutely yes. But is that enough to trigger the next major run in the crypto market? Let's try to figure it out using the Bitcoin and altcoin charts. And to increase the chances of crypto growth, help this video spread, press like, and even better, subscribe to the channel while watching. Those who don't skip my videos have already seen the following idea. The key signal for continued Bitcoin growth is breaking the bearish divergence on the weekly time frame. Now well-known traders are asking the same question because they can't ignore such an important signal. Unfortunately, Bitcoin still isn't showing strength. This is not financial advice, but personally, from my perspective, the probability of seeing $110,000 is higher than successfully reclaiming $115,000 as a confirmed uptrend level. The rest of the crypto market will follow Bitcoin. Here are the scenarios worth paying attention to. For our analysis, we will use the total 3 market cap chart. On this chart, we have 2 major levels that have been tested every cycle, level 1.0 and 0.25. These levels help us form a strategic plan. As you understand, the bullish scenario would be reaching level 1.0 and the bearish scenario would be trading around 0.25. Right now, we are near the bottom, and during the most recent flash crash, we even touched level 0.5. From here, we must consider multiple outcomes. The first scenario, if the cycle peak is already behind us, altcoins may not survive. Sadly, yes. If the market top has already occurred, altcoins simply have no reason to climb anymore. Only tokens that still manage to catch new narratives might survive, but even then, those returns will be nowhere near previous bull run gains. The second scenario, the peak is still ahead, meaning we could still see an altcoin season. The key factor for altcoin growth is Ethereum's strength. If Ethereum can stay above $5,000 and show strong price action, ideally outperforming Bitcoin, this would empower altcoins and fuel liquidity toward them. So far, this hasn't happened. Even if Bitcoin rises, there's still no point expecting an alt season because liquidity will flow into Bitcoin first. Therefore, Ethereum's dominance is a mandatory component for alt season, and we still don't see it happening. One scenario that may still work is this combination. Trump eases pressure on China, the Fed continues lowering interest rates, and BlackRock keeps promoting the crypto market. All of that together could drive Bitcoin demand, followed by Ethereum, and then the altcoins. The key issue is that all of these factors must align, and currently, the situation is objectively difficult for the crypto market. And if you want to be among the first to receive important updates on crypto and global finance, plus professional analysis, check the first pinned comment for a link to my Telegram channel. Thank you for watching. Yours,